To the big show. I'm Clayton Morris. So glad to have you all here to talk about real estate investing, to talk about the current state of the market as it relates to the commercial real estate collapse, if there is a collapse, what is going on with housing in the United States right now, and how all of this could be tied to the illegal immigration. We have tens of millions of illegal immigrants, of course, that have been allowed to walk across the United States border freely and given free housing. And as part of the Green New Deal initiative that AOC, Alexandria Ocasio-Cortez, has just floated a few weeks ago, housing. Housing was a big component of this green initiative for green housing. And of course, a big piece of that is making sure that people who are non-citizens of the United States get access to housing. I mean, this is the United States of America after all. So what is going on here? We wanted to ask the legend himself, the man, the myth, the legend, the author of the ABCs of Real Estate Investing, the Rich Dad advisor to Robert Kiyosaki, who does an amazing job over on his website, Ken McElroy, our good friend Ken McElroy, the legend of real estate investing. Ken, great to see you. Welcome back to the show. It's been too long.
It has been. Congrats on everything, the success. It's been fun. I've been doing my thing, man. It's crazy times.
It is. And you've been keeping your finger on the pulse of it. I follow you on Twitter. I watch what you're saying. I see what you're doing with all of your great YouTube videos and covering what's been happening right now. So I think, to give our audience a little backstory of you, I mean, obviously they might know you having written the ABCs of Real Estate Investing. They might know you from appearing on the Rich Dad radio show. They might know you from some of your podcasts and YouTube channel. But for those of our audience that may be not familiar with your backstory, how did you get started with real estate investing? Maybe give our audience a little primer, and then we'll get into the nuts and bolts of what's currently happening in this market.
Certainly. It's been incredible. I started in property management right out of college, out of Seattle. And then about 8-9 years later, I started buying properties. And so that was in the 80s. And I've been buying ever since. So we bought over $3 billion in commercial real estate. That would be office, that would be self-storage and multifamily. Right now, we have about 10,000 multifamily, primarily Arizona and Texas, but I've served on a lot of the boards, the National Apartment Association, the National Multi-Housing Council. So I am in touch with what's going on around the country and even internationally. So, I'm following occupancy, vacancy, defaults. Obviously interest rates are a big deal. Right now we have about 1,500 units under construction. We have a whole management company. So I've got now over 300 people working for us, and it's been it's quite a bit of fun. So housing's under attack right now, that's for sure.
So 1,500 units right now under construction. So you're not holding back. I mean, and that's what I love about you. There's a lot of fear out there right now, but you're saying let's go forward, right?
Well, I think whenever I remember years ago in 2008 when I was checking out of a Target around Christmas time, and the cashier handed me their card and they said, "Hey, if you're thinking about buying a house, you can buy it from me." And I'm like, "Okay, it's over," And so what happens a lot of times in this business is when the media, they're so slow. When the media actually starts to gravitate onto something, it's already gone. So really the defaults are starting to show up, and in housing, when the Fed started increasing rates 18 months ago, 2 years ago, let's say, in response to inflation, then obviously developers pulled back, and obviously it was super disruptive to the whole industry, and that's showing up now. And the result of that is, I call it the pig through the python. Anything that was being built prior to that, let's say 21, 22, that's still obviously going to finish being built. And so we have a lot of product hitting the market today, but we have a lot of distress today. And so it's a really good time to enter the market, because anything I break ground on today isn't actually going to be meaningful for almost 2 years.
Wow. Okay. Great to know. I mean, that's a lot of so we we really focus on a lot of single families and duplexes. You've traditionally, from as many years as I've known you, really been in the commercial real estate space, 4 units or above 4 units. So can you talk about that journey for you, and maybe how I remember talking to you with large high-rise buildings that you were focused on for many, many years. That was sort of your bread and butter. How has that shifted, or not at all?
Well, the whole space is, a lot of times people lump everything into one big category, real estate, right? So they put houses there, they put office buildings there. They put multifamily and industrial and retail and regional malls. All of those things have different paths, of course, and all of those have different vacancies, and all of them are under, kind of different set of circumstances. So I'll just pick on a few. So, regional malls are dead, right? Amazon and all that stuff, that's long gone. That's old news. Those are all being redeveloped. That's really, really, really good. And there's a lot of big people, because they're in the middle of towns, a lot of them now. And so those are really, really good opportunities for real estate investment. Office buildings are kind of the hot topic, as you know. The cities don't quite know what to do with these things. They're vacant. Nobody wants them. They're not really convertible to residential. And so that's the new big knife to fall, and it's falling hard. And some markets like Chicago, San Francisco, New York are in big, big trouble with obviously, the vacancies. And so these are either trading or going back to the banks. The next thing that's in trouble and distress is multifamily. And that's really primarily where I am at the moment. And the multifamily buildings, the reason they're in trouble is if I, like even myself, when we've been building through this whole period of time, we break ground on something. It was 4% 2 years ago, right? The interest rate. Now it's 9%. So that's meaningful. So right. when your rates go up that much, so do your mortgage payments. So all of this stuff is kind of reacting differently based on all the different things that are happening. But generally, there's a massive displacement and a shortage of housing in the U.S. that actually started in 2007, 2008. So from that, if you go back and look at 2007, 2000 to say 17, let's say that 10-year window, you remember what was going on. The single families were going back and multifamily was in trouble and the banks were not lending. Well, people still were being born, and and so all those folks that need housing now, we had a huge shortage period of almost that 10-year period, and we need about 1 million units a year to just to be added to the economy, just to keep up with population growth. So that 10-year period kind of created this little run we just had. We were starting to get back. But then the interest rate rise really had a lot of people pull back. And so we're gonna hit a massive shortage again in 26, 27, 28. And the politicians, once again, will be significantly behind this. They won't even see what's coming.
So that's fascinating. So 26, 27, 28, we'll have a massive shortage. So post-COVID, a lot of those properties are now popping, becoming available. The backlog, the builders who had been held back artificially or actually not being able to get lumber, not being able to get materials were held back. So now a lot of those are coming to fruition. But now we're going to see a real pullback and a real shortage into 26, 27, and 28. You're going to see the politicians, of course, trying to all point fingers.
Yeah.
But you're telling us right here, right now, what's happening.
It's going to happen. I'm telling you, it's just simple math. Like the other issue is a lot of people lump multifamily or apartments in with single family, and they could not be more different. If you think about it, the right way, and I'm in a balanced market, I believe. Like my son, you've met my two kids. They graduated from college, and they move straight into rentals. They build credit, and then they're supposed to be able to save enough and buy a home. That is balanced. That's what's supposed to happen. There's supposed to be affordable housing. There's supposed to be affordable rentals. And that's what I believe. That's when things are in balance. Right now, things could not be more out of balance. And so what's going to happen in 6, 7, and 8 is we're going to have massive rent growth again. And the politicians are going to be, once again, they're going to be late to the game, and they're going to put in all these rent controls and rent caps and stuff like that, when really what's needed is just supply to be able to take care of the growth. That's it. And then, of course, I know we're going to get into this, but immigration really, really has changed this picture in the last few years. And that's a massive, massive issue.
Yeah, let's talk about immigrations, and I want to come back to this and unpack a little bit more of how are they going to, what incentive right now is there for builders to put a lot of additional units on the market and start building a lot of houses when they're sort of facing these headwinds right now? It's really the difficult situation, the higher interest rates. They've got a lot of inventory then just sort of sitting there because people don't want to move, people don't want to buy it. So maybe I guess the answer is you just give them away to illegal immigrants, and you get some sort of a government subsidy. They'll pay the builders some sort of a subsidy, I guess, to put illegal immigrants in here. I mean, I don't know what else they're going to do with them. It's going to be crazy.
Yeah. Well, if you're a builder, it's funny. I was talking to an economist the other day, and he was saying, "Well, you just pass that on to the consumer." And I go, "Well, it's not that simple. Like if your interest rate costs double, that you can't pass that on to the consumer. The market bears what the market bears. The rents in the market are what the market is. The price of homes are what the market is. And that's largely dependent on the supply. So whenever there's an oversupply of anything, it doesn't really even matter what it is, then prices go down. And when there's a shortage and a lot of people want something, prices go up. Same thing with rent, same thing with housing. So what the economy really needs is it needs good affordable housing for people. People are getting squeezed. This is a crazy time. I have 10,000 tenants. I did a video on YouTube, and what we're seeing. I did a video, and it was all about what my tenants are seeing. What I'm seeing. How are their behaviors changing? And delinquencies are up. Partial pays are up. They're having a tough time. They racked up their credit card debt. Their savings is down, and these are all documented, as you know. And we're starting to see different products enter the market. Like there was Apple Pay, and now there's Apple Pay Later.
Right.
And there's another program called Flex, where you can literally finance your rent weekly. And so these are things that I've never seen, and I've been in this business a long time. So it's really hitting Main Street.
Wow.
And it's rough to see.
Wow. I haven't heard that before. That's amazing. I hadn't really thought about that. But yeah, you're seeing all of these new pay later services. When you're checking out on Amazon or you're checking out on any of these different services now, you'll see the options pop up. All of these like pay later services. It's really, and it's keeping these people in a cycle of debt. We had numbers, of course, a few weeks ago, national credit card debt in the United States. It's absolutely staggering, the amount of credit card debt for Americans right now. And of course, and I love that the silver lining in that story was they're not opening or they're not adding a lot of new transactions onto their accounts. Yeah, because the interest rates are so high and they've been so priced out, they have no more wiggle room. They have nowhere else to go right now. So they're not adding that television. They're not buying these additional things. And many of these purchases are healthcare costs, rent. They're even using credit cards to pay their rent. It's incredibly troubling.
Yeah. And I actually don't see it getting any better. We're going to go through like a year and a half to 2 years of the market's going to go back to the renter. The renter is going to actually have a fair amount of choices in the next 2 years, and that's because of all the product that was started 2 years ago. But then after that, it drops off like crazy, and then it's just going to go back to all that stuff's going to get absorbed. And the other piece to add is the single family houses, as we know, it's as evidenced, they're not going down. And so single family houses are creeping up. And now you've got 7% rates. But even if the Fed this year lowers rates a few times, which I think they're probably going to, they're just going to be in the low sixes, or
Right.
maybe in the high fives. It's not going to be meaningful because the real bulk of the housing is they have rates in the 3% and 4%. They have all this trapped equity. They're not moving. They're not going anywhere. And so it's not going to be meaningful, I should say. So what's going to happen is the renter is priced out of the single family market. And again, going back, renters are supposed to be able to save enough money for a home and move into the home. The rental market or the single family market is actually going to get worse, and the multifamily rent market will actually get better for the renter for a while. But then after that, it's going to get bad again.
I mean, we need more people like you building homes, right? I mean, and the government right now needs to incentivize this. We need millions of units right now. And I don't think most Americans understand just how many units we actually need. You mentioned a few numbers there with the flow, kind of what was the per year number of units that we need
Yeah.
for
So
people to?
if you take a look, just type in housing shortage in the U.S. and you'll see like Fannie Mae came out recently and said that we're 1.5 million short. There's been other groups like Realtor.com that say that it's in the 3, 4, 5 million range. So there's a lot of different views on this, but it all goes back to the lack of new supply. You can't have people being born and age out. The average renter, just over history, starts renting around 18 years old, 18 to 19 years old. The average buyer usually buys just a little bit over 30 years old. So those are two things that, you know, it's not even something to debate. It just is what it is. And so those folks, as they're born and they're aging out and they're moving out of their houses, they come into the rental market. They come into the housing market. They want to buy. That's generally what it's been over the history of our country. And so if you just look at that, you'll see that the that's going to be a problem because there wasn't a lot of units built from 07 to about 2017, 2018. And then we started to build again. We started to catch up. So there's a lag there. And there's a lot of data and study around this from a government level, from a private level, and it's in the millions.
So then if we have such a shortage of housing and builders, of course, are dealing with all of these interest rates, builders are the ones out there on the front line actually doing the work to build the homes. And they're hesitant right now because they're getting burned. Should we go back to projects? Should we have the government should we have the government step in and start building houses again? Because that worked really well before, right?
Yeah, wow. I know. So the government sucks at housing, as you know, and they need the private sector for sure to be able to do this. And I think that I believe and I'm hopeful, and we're already starting to see this is a good sign. They're already starting to be California passed an ADU law. It says accessible dwelling unit means that you can build something on your current property. There are other governments that are starting to look at this. This is a little bit of relief. So it allows somebody who maybe owns a home, they can build something on the back, they can rent it. This is actually progress. So we're also seeing the zoning being relaxed. Where, just as an example, if there's a lot that costs $300,000 or $400,000 and you could build one home on it, they're saying, okay, we'll let you build two. Those are really important, small little things, because now the builder's land costs are the same, but they can build two homes instead of one. So this all just boils down to math of what it costs to actually build something. And at the end, when the dust settles, the math is the math. And the builder's going to try to get a little bit of a markup if they can, but they're not going to start or build anything unless there is a reason to do it. Nobody's going to build something at a loss. So the math has to work in order for somebody to put a shovel in the dirt.
And the math also is staring us in the face when it comes to illegal immigration in the United States, which I want to talk about in a second. Ken McElroy is joining us right now. If you're just tuning in here, we've got a couple hundred of you here, which is great to see. So of the hundreds of you that are watching right now, please drop us a question, any questions you have about the commercial real estate space, about the residential real estate space, about what's happening with illegal immigration and housing. We're specifically focusing on the economy and as it relates to housing today. And that's why we have Ken on the show. So, Ken, let's talk about this illegal immigration issue. Of course, conservative estimates have it in the 20 to 25 million range over the past 4 years under President Biden. Illegal immigrants have come across the border into the United States. Those are conservative numbers. Experts I've spoken to, former Customs and Border Patrol sources have told me that they believe it's over 40 million of illegal immigrants that have come into the United States unchecked, and they're free to sort of roam around the United States. And for those of you watching right now that think that's amazing, that's great, America can handle all of that. Just think about the percentage of individuals it took to carry out a revolutionary war against the Brits, right? It was 3% of the population. So what you've just done has added multiple percentages more to the United States population in just a short order. And we don't have the resources to handle all of it. So how is this going to affect housing in the United States?
Well, it already has. And I think you got to go back to, this is my world. So, we all know home prices have gone up a lot. I think we're in the mid 400s right now. And occupancy before pre-pandemic was in the 95, 96% range for multifamily. So those are incredibly strong numbers. Okay. So you got to start there. Then you add people and it just makes it worse. So you gotta wonder why cities and states are actually still have high occupancy and really really high rent growth. It's because as an example, you look at New York City or New York even. New York is probably, I'm going to pick on New York for a little bit, because if you take a look at the amount of people that have moved there. And I'll tell you what, Jerry, we can pull up this chart real quick. These are undocumented. So you have documented and then you have undocumented. And I think this is an important thing to look at. So let's just take a look at this. This is what it does. I look at this from a housing standpoint. So when you start to look at these numbers, and of course, they're hard to figure out, as you pointed out, Clayton. So you got millions of people moving around in LA, New York, San Francisco, obviously the Texas area, which we're really strong at, in Florida. And what that does is it puts a tremendous amount of pressure on all the infrastructure. And so with respect to New York, Jerry, we can go back now. I just wanted to point that out. If you take a look at what they've done, why would occupancy be so high, and why would continued housing be so high? Well, you just look no further than some of the other countries. So if you just north of us, obviously, is Canada. So Canada has millions of people also come into their country. Their average price of the home for the entire country, Clayton, is $791,000 for the entire country. Think about that. That's the whole country. So obviously, Toronto, Vancouver, you're going to have higher numbers. Same thing with rents. So we've seen up there, you've got 3, 4, 5, 6, 7% rent growth, depending on the city. And you've got massive, massive housing prices. Now, these are documented immigrant, not
right.
Undocumented. So we have documented and undocumented. And what I tried to show you there was undocumented. And so it's putting, if you look at the city of New York, just took 15 hotels and then turned them into migrant centers, and at a tune of $77 million. Then there was a Mayor Adams allocated $275 million to the Hotel Association of New York to house 500 migrant workers. And then the governor, Kathy Hochul, 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 I think it is.
Yeah, Hochul,
she allocated $500 million out of the state budget for this exact thing. So if you take a look at the numbers just for New York, you're looking at I read up to $12 billion over the next 3 years just for migration, just for immigrants. That's a significant amount of money. And by the way, this is happening all over. And so people that live in these areas that are trying to work in New York City, let's say, and affordably, this is all putting massive pressure on the whole housing market. And once again, we were already in a shortage. Then you just add more people and it just makes it worse.
Yeah, where are they going to go? And right now, the answer is, well, we don't have the housing, so people are being kicked out of their gymnasiums. We've seen schools removing, oh, sorry, we're not going to play basketball here for the school anymore. We're going to use the gymnasium to house the illegal population here in this sanctuary city. We're going to create tent city parks in our public spaces. Those areas are now being used and utilized for this, or open up your home. We see this in different cities across the country. They're being told, like in Denver, Colorado, they're being said, just dial 211 or whatever it is on your phone, and you'll be connected with someone, and you'll talk to them for like 20 minutes, and you could open up your home to an illegal immigrant. And And this is what these sanctuary cities are trying to do right now because they just don't have the space and they don't have the homes to be able to handle it. And in the meantime, yes, tax revenue is going to fund this, and it's coming away from other city services. It's going away from police, firefighters, first responders. We covered here on the show how police are now sending drones out in California for a 911 call. They'll send a drone out just to check first if it's worth sending an actual human being because they just don't have the resources anymore. So they'll send a drone to your house if you're being murdered, just to double check that you are in fact being murdered. And then if you are, then they'll send a human being out to try to help you and assist you in that situation.
Yeah, it's really, I will tell you the only way to fix this is to incentivize people to add housing, because just like anything, it's not going to stop when you add that many people to something and it was already underbuilt. It's gonna create more unaffordability, and what we need is we need affordable housing. That's what we want. That's what we need. That's what we don't have right now. And when you add people, it just creates more demand on the whole system. And the politicians and neighbors are saying, hey, we don't want any more building, not in my backyard, NIMBY. Nobody wants this. And so the politicians, what they're going to do, the next thing is that they're going to create, they're going to put more policies and more rules around the landlords for affordable housing. And then what will happen is the landlords will go to landlord friendly states. And so it'll just be a vicious circle because the
Let's
landlord.
talk about that. Let's talk about these. Let's talk about that. That's a great point about landlord friendly states right now. We get asked all the time. What are landlord friendly states given the current state of affairs? You're looking at Texas. I'm a big fan of Texas. That's where we build single families and duplexes with our team there in West Texas and Lubbock area and up in Missouri and so forth. But you're seeing a flood of illegal immigrants pouring into Texas. Where are you seeing right now the best bang for your buck? If you're gonna start to break ground right now, kind of forecasting out, where do you see the best returns and maybe the safest, smartest investments right now?
Yeah, great question. So what I love about this, all these politics is that people decide where they want to go, period. So they vote with their pocketbook and they vote with their feet. They say, I don't want to be here anymore. So they have a choice. Most people have a choice and they leave. Not everyone, but most people. So what that seems to be is Texas, that's the North Carolinas, both South and North, and Florida and Nashville. Specifically Tennessee seems to be the states where people are going, and those are just population growth. So you take a look at, or I should say, more migration patterns. So when you start to look at data points, which are everywhere, so this is what I love about this business, because if somebody moves from, let's say, Seattle, which is where I'm from, to Phoenix, and then gets a driver's license in Arizona, then that's a data point. So the Department of Motor Vehicles tracks that. So you can track, that's one way to track. You can track one-way trips on U-Haul, Ryder trucks, North American van lines. And by the way, if anyone wants to have fun doing this, just type in North American van lines, where do people move in 2023? It's fascinating, one-way trips. And it shows where the states and even cities where people are actually going. So there's a tremendous amount of data out there that is, trying to figure all this out, including the U.S. Census Bureau, which is a little bit of behind and a little bit of a lag, and I don't think entirely accurate. But Main Street tracks all this stuff, and so what that does is it puts pressure on all the services for those particular areas. So we like those markets specifically because, Clayton, as you know, I don't want to be a pioneer anywhere. Real estate does not work unless there's people there. And so we're big fans of Texas. Obviously, I'm in Arizona. We're big fans there. We actually like Nevada. We like Florida, North and South Carolina, and we really like Tennessee. So those are the markets that we're focused on now, specifically because that's where they're going.
We got some questions here, and someone Stu Lovell just said bank repossessions. This is more of a statement, but you can take this one. Bank repossessions, foreclosures will be coming fast over the next 12 months, unfortunately. Is that accurate, inaccurate? What do you see?
Well, we're not seeing like we did in '08. So a lot of people like to say this is just like '08. It's not. And I'll tell you the difference because I went through it. What happened in 2008 is the loans of the people's homes were higher than the values. That's a significant difference. That's not the case today. What we're seeing is we're seeing single family homes go up. But to Stu's point, here's what a lot of those people are sitting on 3%, 4% mortgages, let's say. I think that because they have $200,000 of equity, you might start to see people trying to cash in because of the inflation problem. So they don't want to. It's not going to be good because you can't move even next door in the exact same house because your payment's going to be $1,000, $1,500 more because the rates have gone up so much. So I think that that's why Fannie Mae, I don't know if you saw, Fannie Mae came out with this second program. It means that they're going after, you can actually take equity out of your home without getting out of the first. So you can actually get some relief money. So Fannie Mae just came out with this program. It's a very interesting program. So if somebody has a lot of equity in their home, they can keep the first in place and then they can bring a second on if obviously they qualify and they go through all the underwriting. So I think that's a way to tap into that equity because people are getting squeezed right now if you look at personal savings accounts. So we're not seeing the bank repossessions on the single family. It's definitely happening on office and it's definitely happening on multifamily. But I'm not seeing it at the magnitude that I was before on the single family.
That's good to hear on the single family side. And I think this speaks to a question Ricky Bobby, here with screen name Ricky Bobby says, question, if they keep saying it's all over, then why do they keep talking about future investing? I'm at a loss. And I think that speaks to the nuance of where it's over right now. I mean, office space, personally, I mean, you can speak to this. I would be hard pressed if someone came to me and said, hey, downtown New York City, we want you to invest in some big office spaces right now.
Yeah, that would be a problem.
I'm going to say no. But if you came to me and said, okay, we have such a housing shortage in the Raleigh-Durham area, in between these areas on your way to Wilmington, all of it, right? And you want to buy a single family home for $100,000 or something where you can rent it out for this, and there's incredible demand because so many people are moving to North Carolina. So yeah, certain things are over. Certain things are being absolutely crushed right now. Is that accurate?
Yeah, without a doubt. And again, I think what happens is a lot of time people lump everything into a national market, and it cannot be more different, even from one side of a city to the next. That's what I love about it. You can go, like if I'm going to go to Texas, I'm probably going to focus in Austin and Dallas over San Antonio and Houston, let's say. I'm not saying there aren't people moving there, but those are the markets that we like right now based on just in-migration. So again, just simply going back to people, where are people going? Now, on the other side of that, a lot of those people are moving from somewhere. So you probably don't want to be in downtown Portland, downtown Seattle, downtown San Francisco, downtown Chicago. You probably don't want to be there. But a lot of those people moved, and a lot of them just moved into the suburbs. So they don't necessarily all have to move out of state, and a lot of them didn't. And so what you saw is if somebody was in downtown San Francisco and they don't like what's going on with the crime, they don't feel comfortable walking back and forth to their job anymore, and or maybe that employers work from home, they still like San Francisco, but they're just moved outside of the city. So being from Seattle, I can pick on it. I live downtown. I'm from the area, and I was just up there, and all my friends live in the suburbs still. They still live in the state of Washington, regardless of the politics. They just said, we have family here, all that stuff. But I said, when's the last time, to my friend David, I go, when's the last time you were downtown? He goes, nobody goes downtown anymore.
Yeah.
He's like, I haven't been downtown for several years. And it's too bad because these are you think about it. It's just, so you don't necessarily have to move out of a state. But these shifts of migration, these shifts of people moving to different spots, they create bubbles in areas. And so there's always opportunities, always, everywhere.
Let me ask everyone in the chat watching right now. We've got a couple hundred of you watching, which is great. Where are you seeing the collapse happening? I mean, we're talking about the commercial real estate, and we're specifically talking about commercial real estate collapse, and we're talking about office buildings that are empty. I mean, I've been speaking to economists who tell me, most of their offices that they're doing their data on, I mean, they're over half vacant. And
They are.
businesses, just not. Is that number sound accurate to you? Like,
Yeah. 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 Well, you take a look at, like, I think I heard San Francisco was like 40% vacant, and
wow,
you start to look at some markets are doing pretty well, others are not. A lot of it has to do also around the rest of the infrastructure, the crime, the defunding of the police, the safety stuff, whether or not they feel comfortable there. So that stuff's going to work itself out, just like, just like New York City did years ago, before, it was in a horrible spot and then it cleaned itself up over time. There's tremendous amount of time and lag. These are years. I mean, 10 plus years, I would guess,
wow,
till Portland gets cleaned up, San Francisco gets cleaned up. And so, but that's okay. I mean, it's horrible to watch, but
yeah,
at the end of the day, people, they're just going to go where they're treated best, where their money's treated best, right?
yeah.
And so if you just focus on that, you can do extremely well on the investing side. And the immigration thing just throws in gasoline on the whole thing, in my opinion. And the fire was already brewing. You throw that in there, and it just takes away affordability for the people that are already here. That's essentially what's happening. That's why I brought up the Canada thing. It's unbelievable to me that the entire country of Canada is almost $800,000 single family house. That
Well,
is a big statistic.
well, I have my own little anecdote about that. So a friend of mine lives in Vancouver, Canada, and he was taking his daughter to daycare. Um, and he said he knows I'm into real estate. He was coming home and he said, I can't believe it. There's a house around the corner from us, a single family house, and it's selling for 1.2 million. And he sent me the photo of it, and it was the tiniest little thing. And I said, is it at least a 3-bedroom? And he said, no, it's a 2-bedroom, 1.2 million. This little tiny, and it needed to be totally renovated. It was built in like the 1950s. It was a teardown essentially. And this is the reality for so many people. There's stories in Canada of people flying from Calgary just to go to school in Vancouver and then flying back home. So they're renting in Calgary, but they're going to school in other cities. And it's just they're commuting, and it's actually cheaper for them to fly home than it is for them to rent in the city where they're going to college.
Yeah, and immigration's a huge problem there. I grew up on the border. We used to drive to Vancouver when I was a young kid. My parents used to bring us there all the time, and so I've always been tracking that city. And what if you take a look at the last 2 years? By the way, the whole country is only 39 million people, and that sounds like a lot, but that's not a lot for a whole country, because I think we're at like 330 million or 331 million. So you take a look at that, and then you add 1 million people in the last 2 years, and they're of course going to some of those cities. It continues to drive housing up, because the average price of a home, I'm going off of memory, in Vancouver is about in the mid 1 millions, 1.2, 1.3, 1.4, something like that. So it's nuts, and that basically means that if you own something, hold on to it. And it doesn't look to me like that's going to stop anytime soon, because they just continue to let more and more people in. And also, these are documented numbers. They're not undocumented, like what we were talking about earlier.
Yeah, Vancouver housing market right now, as of May, the average price of a home there is 1.3 million,
Yeah.
which rose about 0.6% annually. That's
So
insane.
so think about that real quick. I know I don't want to just pick on Vancouver, but our average price of a home is in the low fours. I think it's 4.25 last time I looked, let's say. Well, in Canada, it's about 800. So it's significantly more. And just before our eyes, they continue to let both documented and undocumented immigration in there, and the rents are going up, the housing's going up. It should be no surprise. This is happening in Australia. And now it's happening here. And so people are going to wake up in the next 2 years and they're going to go, what just happened? There's the, house prices are going to continue to go up, and rents are going to start going up again. And the affordability train has left, and it's not stopping anytime soon. The only thing that's going to happen is a reduction of people or an increased amount of housing. That's it. And they need the private sector to fix that.
Let's take a few questions here and we'll get Ken out of here. He's been gracious with his time today. Anybody, we've got hundreds of you watching right now. Don't be shy. You have any real estate or housing related questions? He's a legend in the real estate business and the investing space. This is Ken McElroy, the author of ABCs of Real Estate Investing. He is, of course, a Rich Dad advisor. And he's a great guy. He's a genuinely great human being and just a great teacher and always gracious with his time. So if you've got any questions here, ask them away. Power of Real Estate says you can't save some cities from businesses and people leaving. I guess, yeah, I mean, you can't, right? I mean, I guess you could if you did sort of what maybe Detroit, is Detroit,
yeah, Detroit's a tough one. Like it was the fifth largest city in the 50s. Now, a lot of people obviously on this call won't remember that, but it was 1.8 million people, and today it's 650,000.
Wow.
So again, going back to, people make decisions. And there was a time, Clayton, where that you could buy a home in Detroit for $100. And why would they do that? They do that because they want the tax revenue, and you got to be careful not to catch a falling knife, and so some of these cities are still free falling.
Right.
And that's going to certainly work its way out. But Detroit still has a long way to go. And I think that, a lot of this stuff, as you know, I have the kenmcelroy.com. You can go to kenmcelroy.com/market research. And we've got a whole bunch of data on this stuff. People can go on my website and just take a look at what I'm trying to, at some of the documents that I'm using, because, all this stuff is trackable. Every single thing that we have on the website is trackable, because you have to look at all things. You have to look at census, you have to look at population growth, you have to look at household formation, you have to look at rents, you have to look at where immigration's coming in. And the math is quite simple. It's births minus deaths plus immigration. Those are the things that have always driven housing. And then, of course, from there, migration. And so as people move around, it puts pressure on housing. So it also puts pressure on everything else, the healthcare system. It also puts pressure on the hospitals. It puts pressure on restaurants. It puts pressure on schools. All that stuff, including housing, is just one more thing is affected.
True. Stephen asks, when looking at investing into real estate, what are the major things to look for in the company? Well, you and I both run companies, so I'll let you take this one.
So when looking at real estate, when looking at investing, what it measure in the company, which I'm assuming the company meaning.
Well, I guess like in the terms of like for what we do, we're not like a turnkey company. We're more of a full service company. So when someone would work with us, they would have like a hands-off experience.
Oh,
it'd be full service. Yeah. They would be able to buy a property, they'd own it, and it would cash flow. And you obviously do things a little bit differently, I think, with your structure over the years. So what do you look for? Like if I was to come to Ken and say, hey, I'd like to put some money into Ken McElroy's, 10,000 tenants, what properties could I invest in? What would you say to Stephen?
Yeah. Okay. Got it. I think, what you want is, you want to find a business that's been around a long time, number one. And so if somebody's just getting into it and selling you on the why, you got to look at the whole team. So that's a huge one. You want to look for a company that's kind of been through the ups and the downs. And then also what is the real way real estate makes money? And everybody points at all these different things. At the end of the day, the only thing that pays you back is the performance of the property itself. So
right.
The the property, obviously, if you're projecting that you buy low, sell high, that's a rough strategy because markets do change. And so for us, as you know, Clayton, everything we buy cash flows on day one.
Yeah.
So my renters pay for everything. So my equity on everything I own went down over the last year because of interest rates went up. And so the seller or the buyers are they want to buy it for less because the interest rates are more for them. So but that doesn't mean that I can't pay my mortgages because I have fixed rate debt. My tenants are still paying it. So you got to be careful not to just try to do it on a capital gain strategy. You don't want to buy low, sell high. What you want is you want cash flow. And then when the market peaks at, based on all these things that we look at, that's when you want to exit or do a cash out refi or whatever it might be. So you got to look at the team, you got to look at the market, got to look at the strategy, and you got to look at the story of the deal itself. So you can't buy a good deal in a bad market.
I love that. And I love that you said, I mean, I've been hitting this over the past few months because I've been frustrated. We've had a lot of clients come to us recently who've said that they were upset that they ended up working with another company, and I'm not going to name names or anything like that, but that they ended up paying more than the house was worth.
Wow.
And it really upsets me. And I've done a whole series of videos on this. Don't buy a house with the promise of future gains. Buy it if it's cash flowing now, at or below market value. Why would you pay for the promise of future gains? But they get wooed into this kind of stuff. So don't ever do that. Would you agree or disagree?
Yes, for sure. Well, I put this in my book. My first book is, it's you buy wholesale, sell retail. It's that simple. It's just like anything else. Like if you're going to buy something off the shelf brand new, then you just are reliant completely on the market to take it higher. What we always try to do is we look for what we call forced equity. So I'm always looking for, it's the opposite of what most people do when they buy. You want to buy problems. So right now we have a deal in escrow in just outside of Las Vegas in a little town called Green Valley. And it's brand new property. It's fully built and highly occupied. And we're buying it for $20 million below replacement costs. So that's the story. The story is that we're buying something well below what it costs to build it. And we're a builder, so we can figure out. Look, it's 300. I think it's like 360 units, and I'm buying it way below what it costs to build it, and it cash flows day one. So. Wow. I'm waiting for that 2-year period, Clayton, for, that property. I'm hoping, obviously, it'll go up that 20, maybe even $30 million in that, let's say 3-4 year period. And I'm making sure it cash flows in the meantime. So it's cash flows day one. If the market corrects like I think it's going to, then of course I'll get that additional equity. So there always has to be kind of a forced equity or a story behind something. It could be a vacant house that needs renovation. So you buy it at one price and you renovate it. It should be worth more after that. But you always want to buy at that low point.
Right. So you've got the cash flow now, and great if appreciation, icing on the cake, hopefully that's what's happening. You bought it right. It's going to appreciate down the line. You can tap into that equity, roll it into other projects, and kind of rinse and repeat over the years. This is, of course, why Robert Kiyosaki calls you and says, I just want you to, here's some money. I need you to invest in I need you to invest in real estate for me. That's great. We got a few more questions here. Here is Stu wants to know, yes, please. I'm late, but if I had $500,000, house investment or in gold, silver, or new digital assets, what would I do? What would you do, Ken?
Sure. So I'm going to unpack all of those. So first of all, I don't believe in digital assets at all. So I think digital is digital, paper's paper. It's not real. If you take a look at the matrix of where I invest in physical only. Physical gold, physical silver, water, timber, land. Those are things you can't print. Okay. Those are things that aren't digital. I'm not saying that you might not want to throw some money in there, but I'm not a Bitcoin guy either. I look at Bitcoin like a NASDAQ stock. That's all. I don't, it's possible with the blockchain technology and all that stuff, but it's not really, I can go down the Bitcoin road. and I'm not against it. I'm just saying I'm looking for hard assets,
Right.
hard assets that ride with inflation. So if I'm doing gold or silver, it's physical and not ETFs or paper. On the house investment, it depends on where. So, would I buy a $500,000 house in Scottsdale? I absolutely would, because the rents are $4,000. Would I buy a $500,000 house in Detroit? No, because the rents are $2,000. So, so you gotta like the
Right.
$500,000, but I do like, well, one thing I do love about real estate is you use other people's money. You use debt, you use a loan, you go to the bank gives you 70-80% of the loan, and the rest is down payment. So on real estate, unlike gold, unlike silver, unlike digital assets, you actually that's collateral. Like somebody will lend against it. So you don't actually need all the money for 500 grand. So it's not equal. I would rather, if I'm going to use $500,000 in gold, I would first of all do physical gold. But with the house, I only need 100 grand. I only need 100 grand to buy a $500,000 house, because the rest is from the bank and the tenant pays it off. So they're just very different. But that's my philosophy on investing.
Yeah, I mean, I love physical assets. That's what I'm investing in. And, but a bank is not going to lend you money to buy gold and silver, but a bank will lend you money to buy real estate. So you can
Yeah.
use the bank's money and other people's money to build wealth. And that's the way that we've done it here. And that's why we're such big proponents of it. Here's Andres. He says, could we foresee a new boom in the lofts market? Lofts.
Yeah.
I lived in a loft in Dayton, Ohio, that used to be like an electric company at one point when I lived in when I was starting out in the news business, and there was a lot of that trend with like a lot of these downtown buildings, these office spaces turning into lofts. The trendy place to go.
Yeah, I think anything affordable, yes, I would say yes, 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 yes. What we're starting to see is 300, 400, 500 square foot places to live. Like you've been all over the world. Hong Kong, obviously that's nuts, right? Like you go to some of these other countries, even not just China or Hong Kong. You can go to Italy, or a lot of these places. People live in really, really small places. My good friend George Gammon lives in Colombia, and he went into somebody that works for him. It's a 750 square foot 3-bedroom, and each bedroom is rented by a different family.
Wow.
So that is how most of the world works. The U.S. is just completely entitled and spoiled. They don't realize how big stuff we've got here and how nice we have it here. Yet they still bitch.
Yeah, exactly. I mean, living in Europe or experiencing that, and you want to try to find a parking lot or go to dinner and try to find a place to park a car, it's not going to happen. You want to not have your car scratched driving down tiny roads. It's not going to happen, So, people love to bitch about that stuff. T-Pug says, Samsung is building a new plant in Texas. Anyone looking to build in that area? Of course, a lot of big manufacturing, part of the CHIPS Act underneath from Nancy Pelosi is, of course, Taiwan Semiconductor, and a lot of big semiconductor plants and manufacturing coming to Texas. So a lot of manufacturing coming to Texas. You mentioned Austin, Dallas area. I'm sure just boom areas for manufacturing right now.
And Phoenix too. Yeah, we have a huge plant here by the Taiwan Semiconductor here. It's what is it, 14 billion? 40 billion. Yeah.
Wow.
$40 billion. They're building a huge plant north of Phoenix. I've got property out there. If yes, the answer is yes. You want to build where people, it's going to employ thousands, obviously. That's exactly right. You want to be, when they break ground, actually not planned, when it's under construction, you've got 2-3 years before those things are even open, sometimes even longer. Well, of course, those are exactly the areas that you want to buy. You got to be careful. I've been in situations before. I actually owned a property in West Richland, Washington, which is the Tri-Cities, and it was next to the Hanford nuclear plant. Now, this is going way back. In the early 90s, it got decommissioned. So there were 12,000 employees.
Oh.
So, you also got to look at that side of it.
Yeah.
When military bases are closed, and you start to see those kinds of things happen, or big industry moves, then that can like that's what happened to Detroit. That can shift a lot of things. So the Samsung plant being built is something to watch, but it doesn't tell the whole picture, right?
Right. No, for sure. I always use that as a cautionary tale about, if you're investing in a town and there's one oil refinery and that's the main source of income for all of your tenants. What happens if that oil refinery, is closed down, or in your case, a nuclear facility is closed down? Yeah, and then they're all out of jobs, and of course that's devastating. So that diversity of jobs there. I'll get you out of here on two more questions. Kathy Howard says, "What real estate is the best investment right now?"
So I personally think anything affordable housing, anything like we're starting to see a run on mobile home parks of all things, because it's affordable, right? You can get into mobile homes for pretty cheap. You can rent them pretty cheap, whether you own them or don't own them. We're seeing a huge run there. We're also seeing a run on senior housing. So if you take a look at the aging of the baby boomers, let's say, which I think started almost 10 years ago at 10,000 a day, by the way. They're, some of them are still working, some of them are retiring, and so we're seeing a big boom on what we call active senior, and of course that moves later into retirement. Obviously our RV parks. I bought last summer. I bought a RV, and I drove across the country. I went all the way up to Idaho and through Jackson Hole, McCall, Wyoming, cut across the country through Tennessee, and ended up all the way in Charleston, and specifically to stay in RV parks to try to understand what was going on with them. Those are big deals because from affordability, people are actually, unfortunately, living in those in some cases, and on some of those RV parks. So that's the tiny houses. Those are also big. So anything that's smaller and less money, that's really what's on fire right now.
Yeah, Lindsay says RV parks are gaining in popularity as well right now. Absolutely. Final question here from Stockman50 says, cash out refinance. Why is it so hard to get it if you're self-employed?
Yeah, it is true. I know the banking system is really set up that you have to have that W-2 or that paycheck. And my wife actually struggles with this. She's got 5 rentals, and she was trying to, she's got a lot of cash flow because she doesn't like that. She likes to pay everything off and rents them. So she's self-employed entrepreneur, and she had a heck of a time navigating the cash out refi. There are people out there that can do it. You just got to keep looking, but the traditional system, it basically looks for the employee with a W-2.
Yeah, that's unfortunate, but that's the sad state of affairs, unfortunately. Ken, well, I just want to say thank you so much for your time today and joining us here on the show. We really appreciate it. Where can people learn about everything that you're doing right now? You mentioned kenmcelroy.com, but there's also some great resources there as well, right? If they want to.
Yeah, kenmcelroy.com. You can find everything. We've got market.research.resources, and we have a lot of stuff on there that you can take a look at. We've got, obviously you can listen to our podcast, our YouTube channel. We don't sell anything. We're just providing research, and we have a fair amount of investors, obviously, that invest with our company. And so we like to be kind of one of the leading authorities on where we're trying to go and what markets we like.
I love it. Pay attention to what Ken's team is doing, researching demographics, crime, job growth, building new roads, building new infrastructure. Is there a chip plant coming to this town? What does all of that look like? Ken's team is diving deep into that data. So a great resource if you want to learn what's happening in the real estate space. I highly encourage all of you to go out and pick up his great book as well, The ABCs of Real Estate Investing. It's a must read, and Ken is just a great guy. Ken, great to have you here on the show. We really appreciate it.
Yeah, Clay, always great. Can't wait to see you coming back, and we'll see you guys soon. Thanks again. Great catching up.
Yeah, we'll grab some dinner soon. So thanks, Ken. Great to see you. All right. And thanks to all of you guys for being a part of the show today. We really appreciate it. And we've got a lot of great resources. If you want to come over to our website as well, we can connect you. And, we've got a lot of great blog posts. We put a lot of hard work into them for you to read and what's going on right now in the broader economy. And it's totally free to read. Come on over. You can get our Freedom cheat sheet as well, which is totally free. Just go to morrisinvest.com and click on the Freedom cheat sheet there, and you can download that for free, as well as grab all of our information, all the different blog posts and information we have over there. So there it is on your screen. So thank you guys so much for joining us today. We'll be back here once again, and check out all of the great content here on the channel. My thanks to Ken McElroy